And what's very clear to me is that there's very few available advanced stage project in tier 1 jurisdictions. So that's where Talisker and particularly our Bralorne project really stands out. Having a permitted project that has potential for multi-million ounce production. The permit we're increasing to be able to give us a scope to be able to see a pathway for plus 100,000 ounce a year production.
My next guest is Terry Harbort. He's the CEO of Talisker Resources Ltd, trading on the TSX under the symbol TSK and in the United States under the symbol TSKFF. Terry, welcome back.
Thanks very much. It's been a while.
It has been a while. It's been a couple of years. And the reason I was eager to have you back is because I've been seeing both the price of gold trending and yearning ever higher at the same time that your press releases and your drill results continue to demonstrate very encouraging results. So what has happened in the last 2 years to move this whole project forward?
Well, an awful lot of diamond drilling. We're at around about 120,000 meters in the ground now, and really on track for that first resource up at our major project up at Bralorne.
Perfect. Okay, so then in terms of the movement towards a producing mine, how much further along are you in that? What's the sort of status of the estimated resource at this point?
At the moment, we're targeting our resource range of between 1.5 and 2 million ounces. At present, for this first resource, we're looking at high grade veins. At the moment, we've been targeting around about 14 of the somewhat 60 veins that have been identified at Bralorne. So what we're drilling at the moment is only a fraction of what's actually there. Of those 14 veins, we're well advanced on modelling those veins. What's of interest to us as well is what sits outside of those veins. What's very clear to us is that there's an awful lot of gold that sits outside of the veins in alteration or fracture halos around the vein. And last year, we also intercepted some very interesting large-scale bulk tonnage mineralization. So these were 100-gram meter intercepts. So that's all quite new for us. We probably won't have much of that modelled of the bulk tonnage for the resource. It'll be predominantly a high-grade resource, but we're well on our way to that. Currently 9 rigs turning, so a pretty hectic site up at Bralorne at the moment. And we're looking to have that drilling completed sort of mid to end Q2 and then come out with that resource. We're also working on increasing our mine permit capacity. So Bralorne, as you may remember, is a fully permitted project, water discharge and production permits, and we're looking at increasing that daily tonnage.
Sure. So then is the sort of conceptual target still within the 5 million ounce potential range there?
For the high grade veins, certainly is. We don't really have a potential number at the moment for what the bulk tonnage could look like. So we're having a look at bulk tonnage areas, both open pittable, but also bulk tonnage underground as well. So that's in fairly early stages, and we think that'll add to that potential volume. So hopefully increase that well beyond the 5 million ounce estimate.
Mm-hmm. And has the sort of the strength in the price of gold been a help to what you're doing? I mean, you just closed a private placement for $12.5 million.
Interestingly, it hasn't. We've really noticed over the last 6 months there's been a decoupling in the gold price relative to junior miners and junior explorers. So I think a lot of your listeners are probably well aware of that, strong supporters of the junior mining space. And we haven't really seen that level of funding come back into the juniors. sort of January, February this year, looking at the JDXJ, we've noticed the junior producers have had some inflows back, but we're still not really seeing that in the exploration space. So we have seen some good capital raises, mostly for advanced projects such as ours, that are either coming into their first resource or have a significant resource already on the books. But I think we clearly see that most junior explorers are very well undervalued, despite this incredible run with the gold price.
Mm-hmm. And so what about your other project, the Golden Hornet project? Is that, you just started a drill program there back in January?
Yes, very happy with how that initial work went there at Golden Hornet. It was only a small first phase exploratory project, 14 holes we put in there, just under 5,000 meters. Very happy there that each of those holes intercepted sulfide and silica mineralization. We've put a couple of press releases out there on that discovery. Some pretty good intercepts with high-grade gold, copper, and silver in those intercepts. Looks really exciting at this stage.
Yeah, you bet. So then, is the absence of sort of participation in the junior mining side, historically, you know, when gold is trending towards all-time highs as it is now, that's when we see the sort of broader investor interest come into the junior golds, and that has not happened here at this point. And I'm wondering if you have any insight as to why that might be in this particular cycle.
Sure. You know, I think it's just around the corner. I think the clocks are really ticking. The main thing is that producers and advanced developers are actually fairly cheap at the moment, fairly low multiples. And so I think a lot of the investors, and particularly the generalist investors, are investing in those companies, not so much in the junior space. We've had a pretty good exchange ratio between the US dollar and the Canadian dollar and the Australian dollar and other key producing countries' currencies. And we've also had a relatively low oil price. So the Australians and the Canadians in particular have been able to produce gold relatively cheaply at fairly low all-in sustaining costs. And it's a pretty good investment proposition without having to go to often the more risky junior mining space. So clearly what we're starting to see now, and unfortunately a lot of it's backed by some global unrest, is this incredible increase in the oil price, also increases in inflation on a global basis. And what I believe is that this is going to have an impact on these all-in sustaining costs of the producers, and they're going to become less interesting for the general market space. And I think we'll see this transition back into the junior developers and then into the junior explorers. So
the price seems to correlate very tightly to what's happening in the major stock market indices in the U.S. If they go down, gold goes up, and vice versa, which is kind of historically the case. But do you see that sort of relationship continuing, so that if we see, for example, this year we're expecting, starting today, I guess, increased interest rates by the Fed, as well as the withdrawal of stimulus, which I've always felt was largely responsible for the absence of interest in the mining sector generally, because it subsidizes the tech sector. So those two sort of catalysts for the tech sector and major stock markets are being withdrawn. So do you think those are going to contribute to a runaway gold price at some point this year? I mean, at $1,900 and $2,000, it seems like it's trending at the higher end of the range, but it still looks like it's got some breakout impetus behind it, especially as the Fed moves into rate increases combined with stimulus withdrawal. Do you see that as strengthening your value proposition?
I think so. You know, I think realistically we have a short-term pathway, a mid-term pathway, and a long-term pathway, and they're really triggered by very different things. At the moment, what we're seeing is a lot of people have concerns about the marketplace in general, whether that be trillion-dollar tech stocks, whether it be biotechs, whether it be junior mining. And a lot of people are pulling out into cash and just waiting to see what happens in the geopolitical scene, what happens on the inflationary front, what happens relative to the devaluation of the US dollar, which I think we all probably believe after many years of quantitative easing has to come at some stage. So I think that's probably controlling what we see on a short-term perspective, that people aren't rushing in, even after a black swan event that we've just had, people aren't rushing into the market to pick up bargains. And that's going to change relatively in the short term, I think. Looking at the midterm, that we have the balance of inflation and interest rates. And as interest rates move up, it's always the balance of do people invest in gold or do they move them into interest rates? And I think certainly the capital gains that's available in gold, as it has a run to the mid 2,500s, is certainly going to outweigh what people can get from an interest rate perspective. If we index up the gold price to an all-time high, whether you choose from the 80s, mid 90s, or in this last cycle, it hits about 2,500. So we still do have a fair range to hit our maximum price range. Unindexed, we're there now, but indexed, we've still got another $500 or $600 to go to hit. So we have a fair bit of scope before we can hit those all-time highs. And then generally there's a run beyond that. So whether we can get to 3,000, I don't know, but I think we've certainly got scope to get to 2,500. As a long-term perspective, even though we see investment in gold as a safe haven, as we have for thousands of years, people migrating across in it, the main thing that stimulates the movement of the gold price over long term, I think, is very solid, and that's the jewelry industry. And about 80% of all gold production goes into jewelry. And long term, we're not going to stop creating more people. We're going to keep creating wealth around the world, and those people are going to use gold as a jewelry store of wealth. So I think the long-term increase in the gold price is also very solid. So short, medium, and long-term at present all look very good for the gold price.
Sure thing. Okay, and finally, what are the things that investors should be keeping their eye on Talisker for in 2022 that will be the most exciting potential events for you?
Well, we've got some really interesting events coming up. The first main catalyst is our resource. At the moment, we're trading at a fairly low EV per ounce, as the rest of the industry is, basically because we don't have any resource. So coming into that resource will be a major catalyst. What we're clearly seeing over the last 6 months or so, or even over the last year, is a very strong M&A industry. We've seen some mega mergers go on, 3 of those coming in. We're seeing a lot of single asset acquisitions. And what's very clear to me is that there's very few available advanced stage project in tier 1 jurisdictions. So that's where Talisker, and particularly our Bralorne project, really stands out. Having a permitted project that has potential for multi-million ounce production. The permit we're increasing to be able to give us a scope to be able to see a pathway for plus 100,000 ounce a year production when Bralorne goes into production. And there's not very many of these assets available in tier 1 jurisdictions. We can probably count them on one hand. So we're hopeful that there'll be significant M&A activity around or slightly post our resource coming out. The front runner for that, of course, is New Gold. They're our cornerstone shareholder with 14.9%. But there are a lot of other interested parties and projects at this stage that have been greatly de-risked. They're really quite rare in the industry. So I think around or post our resource, there's going to be a lot of excitement and a lot of strategic interest into nailing down these near to production assets for these majors and intermediates that have been producing a lot of gold and are really struggling to replace their resource bases.
All right, Terry, that's a great update. I really appreciate your time as usual, and I'd like to have you back soon. Thanks for your time today.
Thank you very much.
Bye for now.